What you just need to understand is that we do live in an inflationary environment now. It's likely to persist for at least 10 years or until we address the problem seriously. And therefore, what people need to do to protect themselves is to invest in or buy or be exposed to things that the government can't inflate. And the best one is Bitcoin. The second best one is gold. So, that's really kind of the easy, summary bottom line. There's a lot more behind that. And by the way, how we get from here to there, it's going to be messy. I mean, Bitcoin could go to 140. It could come back to 70. I mean, these are volatile assets. And, history shows in changing monetary systems like what we're going through right now, you've got to know what you're doing. You've got to have conviction because there will be volatility.
The crypto market is on the brink of major turmoil, and the next move could change everything. Bitcoin recently dropped to $77,000 before making a slight recovery above $80,000. But don't be fooled, the market remains fragile, and bigger developments are looming. Fears of a recession are rising, and the recent movement of over 11,000 BTC by Mt. Gox has triggered a massive sell-off. Financial expert Lepard sees this as a crucial turning point. According to him, Bitcoin is a key asset to hedge against inflation, but the road ahead will be rocky. While Bitcoin could hit a new all-time high, it also risks falling back to $70,000 volatility that not everyone can endure. The sell-off isn't limited to crypto. Global markets are also feeling the heat. The Nasdaq, which tracks major tech stocks, has entered correction territory as recession fears mount. Since Bitcoin often moves in sync with US equities, its recovery could be in jeopardy if traditional markets continue to struggle. So, where is the market headed next? And how can investors safeguard their assets in these unpredictable times? Stay with us as we dive deeper into Lepard's explosive insights. Don't forget to like, subscribe, and turn on notifications for more expert analysis. Let's get started.
I'm not sure if the Oman stuff has been made public or not, but maybe it has. I think the Saudi Arabia stuff has not been made public, but the word I was getting was that these other countries in the Middle East, countries with enormous wealth, were beginning to embrace Bitcoin as a form of digital gold, and they were stacking, and that they were actually there to, among other things, ask Trump's son and Manafort, hey, we're thinking of doing more of this. We're thinking of announcing it. And I was told by the Policy Institute guys that the U.S. response back was, yeah, it's all great. We're very supportive, but just don't jump in front of us. Let us do our thing first, and then go ahead and announce it. So, as I say, to me, that's just huge. I mean, there's trillions of dollars in these countries, and and they've traditionally been sound money countries. I mean, the Arab culture loves gold, the precursor to Bitcoin. And so if they're now learning to make the jump from being investors in gold to investors in Bitcoin, that's a really big deal, in my opinion. So I couldn't have been more bulled up coming out of the conference. You always hear these things, and then you wait and see, well, is it really going to happen, right? Is Trump really going to deliver? Are we going to get a strategic Bitcoin reserve? And then there were some disappointing things with the Trump coin, the Melania coin, and all the other shit coins getting put into another, bucket. But at the end of the day, he came through. And although they have not announced plans to buy a lot, they've announced that they're intending to buy if they can do it in a revenue neutral way. And they've said they're not going to sell. And, and then the Loomis bill today, as you probably saw, has picked up some additional sponsors. And so, I mean, this is how it happens, right? Slowly but surely. The consensus grows that this is the asset to own. There's obviously more work that needs to be done, but it's a big win. Let's face it. I mean, it could, it'd be nice to have it enacted through legislation so that if we have Team Blue winning in 4 years, they can't undo it, right?
Right.
But I think, even Team Blue, has caught some heat because, I mean, didn't they sell almost an equal number of coins? And, they left $17 billion on the table as a result of selling those at much lower prices. So I feel like, we've got knowledge now at the highest levels of the U.S. government that this is an important strategic asset to hold, and that's a big deal. And so now every other country in the world has to focus on, if this becomes the neutral reserve currency, and anyone who studies what's going on knows that we need a neutral reserve currency as a result of Triffin's dilemma, they might start asking, well, and many of them, by the way, have bet on gold. We know China, for example, has bet hugely on gold, has a lot more gold than they say they have. based on the import-export data. And so, they're going to have to sit there and say to themselves, gee, are we making the right bet? Because this is digital gold and it's better than gold in many respects. And, this is Saylor's point, which is, we should sell all our gold and use it to buy Bitcoin, which I, generally speaking, kind of agree with. But I don't think we're there yet. And then again, there's some debate as to how much gold we really have. And I find it interesting. Trump said, he's going to go audit Fort Knox. I hope he does. I hope he finds it's there. I'm a little worried that, that might be an empty promise. I'm not sure they're going to like what they find, but, that's another bridge they got to cross. But look, this is a step along the way. And my sense is there'll need to be more steps. They need to find revenue neutral ways to grow the reserve. I think the minute they start growing it, that'll be another big step. And I think they will grow it. I think they know that they need to have a higher Bitcoin price to help them, because stable coins, which are a small piece of the overall Bitcoin network today, not insignificant, but smaller, are big buyers of treasury bills. And guess what? The U.S. has a lot of treasury bills to sell. And so if the Bitcoin price goes higher and stablecoin market gets bigger, and then those stablecoins need to buy treasury bills, well, that's all good for the U.S. government. So, and Besant knows that. They from back channels, what I've heard, they get it. And so this is really, really positive. And now, does it manifest in the price immediately? No, the price is down right now. I mean, it's like so many Wall Street things, it's kind of buy the rumor and sell the news. And, we bought the rumor, got to 106. And of course, now the news is getting sold. And, I think it's more what's going on right now. I think it's more actually liquidity driven, just that, the world is kind of turning risk off on the overall stock market because the economy appears to be rolling over, and all these tariffs and all the things Trump has made it clear he's going to disrupt things. He's going to break things, as necessary. And one could argue that he's trying to break the stock market in order to help the bond market, because they've got a lot of debt to roll over, and it's a problem. So it's an interesting time, I'll tell you that. I mean, there's going to be more going on in this monetary stuff the next 5 years than there has been in the last 20. We're really in for a lot of change, in my opinion.
Lawrence Lepard highlights a major shift in global finance. Wealthy Middle Eastern nations, known for investing in gold, are now turning to Bitcoin. Countries like Saudi Arabia are quietly accumulating Bitcoin, recognizing its potential as digital gold. Lepard believes this marks the beginning of Bitcoin's rise as a neutral reserve currency. Even U.S. policymakers are exploring Bitcoin's strategic advantages. Lepard suggests that the next 5 years could bring more financial changes than the past 2 decades combined. He also points out how former Bitcoin skeptic Donald Trump has shifted his stance. Under pressure from advisors, Trump now views Bitcoin as a competitive tool, particularly against China. With the US dollar weakening, Bitcoin's appeal as an unprintable, finite asset is stronger than ever. As the Federal Reserve continues to print money to manage economic challenges, Bitcoin stands out as a reliable hedge against monetary chaos. Let's dive into more key moments from Lepard's interview.
I think the SBR, they signed it because they wanted to signal that that we were going to be a leader in the crypto area. I mean, one thing that's great about the way Trump was managed into this, you recall 3 years ago, Trump hated Bitcoin, didn't really understand it. And honestly, to this day, I don't think he completely understands it, but I'm sure his advisors do. But I think what's going on here is that, he wanted to keep his promises to this group. I mean, I thought it was extremely positive, obviously, to let Ross go as he had promised. And he's a competitive guy. And I think the people who sold it to him, in my view, very smartly said, look, this is a race with China, and we don't want to let them get ahead. And he doesn't like to lose. And so that's my guess as to why he did it. I'm not sure he fully understands all the implications. I mean, I'm not sure anyone really fully understands the implications. I mean, if they do what Saylor is talking about doing, which is sell the gold used to buy Bitcoin, I mean, this is really, really a massive devaluation of the dollar. There've been mixed signals coming out of this administration. I mean, Besant has said, we want the dollar to remain the world's reserve currency, but then he's also said we need a weaker dollar, in order to balance trade. And so those two things are slightly in contrast, don't go together. But I think, the world has been unbalanced massively because of the strong dollar policy and because of the financialization of the United States. And Besant said something else I thought was very, very indicative of where they're going, and that is, Wall Street's done extremely well for the past 20 years, and Main Street hasn't done so well. And, it's Wall Street that drives the stock market. And, the people who voted Trump in, a lot of them don't own stocks. They're the working class, and they don't necessarily have enough capital to own stocks. So if the stock market goes down, that's not going to hurt them that much per se, except insofar as it then turns into a recession and they start losing their jobs. So, the problem is it's all interconnected, and the whole economy has been built upon, cheap money and puffing up asset values. And I think, they want to try and reverse that process, but I think the word I used earlier, it's going to be disruptive. It's going to be hard. And they've even come out and said that. And I think Besant also said that, it's very clear that to the degree they're going to be disruptive, they should do it right up front, because in 2 years, the voters get another say, and in 4 years, they get another big say on, what team is going to be running the country. And so if you're going to have trouble, if you break things right now, one can argue, or he can make an argument that, hey, Biden left us with a pile of shit, and we're doing the best we can given what we were left. And hopefully then things will be looking better as the 4 years rolls around, so that JD will have a chance to win. So, there's a lot of interesting cross currents going on, but they know that we have to weaken the dollar to balance trade and really to kind of reshore manufacturing here. I mean, another, related part of all this is, it became very clear in this war that, we couldn't even build the shells we needed to supply the Ukraine for the war. And, manufacturing in the U.S. has been hollowed out, and that's got to change. And the way for that to change is a weaker dollar, so that, we basically, bring manufacturing back here, and it's competitive. Now, the thing that I think most people aren't talking about, including Trump, is that tariffs and a weaker dollar also will result in domestic inflation, more domestic inflation. But hopefully, if it's domestic inflation, but everyone's fully employed, then, the two will balance out, and there'll be wage growth for those who are the workers. And, the people who will not do as well are the people who hold bonds, or the Wall Street people who've made all their money off financialization. So I think that's kind of the big picture, what they're trying to do. My partner describes, I have a partner at Bitcoin Opportunity Fund, David Foley, said, this is brain surgery. I mean, it's going to be really hard. And, we don't really know exactly how it's going to unfold. But I think one conclusion I draw is that almost no matter how it unfolds, it's good for Bitcoin, because, it's likely to lead to some more monetary chaos. And this was the point of my book, which was that really all forms of monetary chaos, ultimately force the Federal Reserve into using the only tool they have, the only hammer they really know, which is print. So, they're going to, when things get rough, the market falls enough, the bond market, has an upheaval, enough people are laid off, people are crying for stimmy checks, whatever it might be, the solution will somehow be to print the money to solve it, versus letting a complete depression unfold and a complete collapse of the system. And therefore, that printing will be inflationary, and therefore in an inflationary environment, you want to hold assets the government can't print. And the two premier assets in that bucket are Bitcoin and gold, in that order, with Bitcoin being better than gold, but they're both unprintable. You can't print gold. So, well, although they have paper gold, but in general, you can't print real gold.
Despite recent dips in U.S. inflation, concerns about the escalating trade war are weighing on investor confidence, especially for high-risk assets like Bitcoin. While inflation appears to be easing, Bitcoin's price remains volatile, and traders are bracing for more turbulence. Lawrence Lepard believes Bitcoin performs best during periods of monetary disorder. As global economies shift and inflationary pressures persist, he emphasizes Bitcoin's value as a scarce asset that central banks cannot manipulate. This makes Bitcoin a critical alternative to the dollar in a time of economic uncertainty. Lepard warns that the U.S. is entering a disruptive era, fueled by trade conflicts and potential Federal Reserve money printing. Bitcoin's resilience, even amid positive inflation data, underscores its close connection to global financial dynamics. As central banks adjust and geopolitical tensions rise, Bitcoin's role as a safe haven asset becomes increasingly clear. Do you think Bitcoin can protect against economic instability in a world facing trade wars and rising inflation? Share your thoughts in the comments, and don't forget to like, subscribe, and share this video. Thanks for watching.